to Perspectives with Wenchi Yu, where we discuss Trump 2.0's policies and politics and their implications for Asia, China, Taiwan, and beyond. While the Trump government claims countries are lining up to negotiate trade deals, China remains unflinched. Neither the US nor China has initiated truce talks. However, recent statements from President Trump and his Treasury Secretary Bessent suggest potential tariff reductions, showing a compromise. China, meanwhile, maintains there are no ongoing negotiations, contradicting Trump's claims. What is the real sentiment in China regarding these tariffs? I spoke with Andy Rothman, a seasoned China economy observer who traveled through several cities in China during the tariff announcements. He shared first-hand accounts from entrepreneurs in Xiamen, American businessmen in Shanghai, and policymakers in Beijing. His key observation: not anger, but bewilderment. Let's hear Andy's insightful observations from his recent China trip. So welcome, Andy. Thanks so much for joining us. You had just returned from a big trip in China that was in the midst of the tariff escalation. So we're very interested in having you share with us the reactions on the ground. Maybe we can start with your career. I know you've been spending decades of time working at China, observing Chinese economy. How did you get started?
I got into this decades ago just by accident. When I was a college student in New York in 1980, the U.S. and China had just reestablished diplomatic relations, and one of my economics professors happened to be from China, and he got a grant from a foundation to bring a few students to China and asked me if I wanted to go. And at that point, I'd had no interest at all in China. But I'd never been outside of North America, and so I grabbed the opportunity, and it was just fascinating. I think that had someone taken me, I don't know, to Brazil at that point, maybe I would have spent the next several decades working on Brazil, but it was China.
So you went to China in the early 80s. And what have you been doing, since 1980?
I got a job offer from the State Department to join the Foreign Service. I asked them if they could teach me Chinese and send me there, and they said, great, nobody wants to go to China. So I ended up going back as a very junior American diplomat to the American consulate in Guangzhou in 1984 and spent 17 years with the State Department working in Guangzhou and Hong Kong. Also back in Washington as the Taiwan desk officer and a few detours to other places in Asia. And then my last job with the government was running the macroeconomics office at the American Embassy in Beijing in the late 1990s.
After you left the government, what other things you've been doing?
So in 2000, I left the Foreign Service and joined CLSA, which is an investment bank brokerage firm headquartered in Hong Kong. And I was their Shanghai-based China economist for 14 years. And then in 2014, I moved back to the U.S. to join Matthews Asia, which is one of the largest actively managed equity holders of Chinese stocks in the United States on behalf of institutions and retail investors. And I left Matthews at the end of last year, and early this year started my own consulting firm called Sinology LLC. I'm working with institutional investors and corporate boards that want to better understand what's happening in the Chinese economy and also on how to navigate U.S.-China relations.
We wanted to discuss your latest experience in China. Had you planned this trip knowing this would come right after the so-called Liberation Day?
No, I planned it before they'd even announced Liberation Day was going to be on April 2nd. So it turned out to be a fantastic coincidence to be on the ground right after.
Let's talk about the Liberation Day announcement. Was it a surprise to you?
Well, I guess yes and no. Almost everything that's coming out of Washington these days is a surprise in many ways. But it's not at all surprising that the president is going down the path of being obsessed with the size of the U.S. trade deficit and also wanting to use tariffs to correct what he feels is an important imbalance.
Let's start with your first stop with this China trip, which was in Hong Kong. Is that right?
That's right.
And what kind of reactions did you get while you were in Hong Kong?
I think the people I spoke to in Hong Kong were focused on two things. One is how it's clear that Washington is considering Hong Kong to be fully integrated into China and is no different, has no separate status from the mainland, and that's disappointing to people in Hong Kong.
And that was a policy that started in the first Trump administration, right?
Right, and the Biden administration continued that as well. And in my view, the Hong Kong government hasn't done enough to press its case in the United States. They've been too passive on this, and that's what they're left with now. But the other thing that people were concerned about in Hong Kong is the risk that if the talks between Beijing and Washington don't make progress or go south, that they will suffer as a result of that, especially the financial system in Hong Kong. For example, if we look at a memo that the President Trump signed a couple of months ago, which is called the America First Investment Policy, it is a laundry list of things that the Trump administration could do to China and Hong Kong if the talks break down. And one of the more important elements of that memo would be delisting the 300 or so Chinese companies that trade on U.S. stock exchanges. And this would have a significant impact on the Hong Kong financial industry.
I can't remember, maybe during the first Trump administration, there was a similar threat as well. And some of them did a dual listing and came back to Hong Kong, right?
That's a great point. This threat, like many of the other threats coming from Washington today towards China, is, in my view, likely, if they follow through, to cause more pain and suffering in the United States than in China or in Hong Kong. As you noted, many of the larger Chinese companies that trade in the U.S. have, over the last few years, set up dual listings in Hong Kong so they can stick with that. Quite a few have not. But it wouldn't take very long for them to get those listings in Hong Kong. So in the end, I think as I said, the impact will probably be greater on American investors. It will limit their opportunity choice. If an American investor wants to put some of their retirement money in, say, a Chinese technology company, they might not be able to do that. And that, I think, goes against the free market principles that our markets have always operated on. The bigger question would be what would come down the road after that. And my fear is that if things really deteriorate in U.S.-China relations, there are people in Trump's orbit who would propose a significant financial sector decoupling with China and with Hong Kong. And if that were to take place, if, for example, American investors were to be prohibited by law from investing in Chinese companies, like, for example, we've done already with Russian companies, then that would be a major blow to the Hong Kong financial industry. And not just because of American investors, but because these kinds of things reverberate around the globe, and it would have an impact on investors in Europe, for example, being able or willing to invest in Chinese companies.
I do want to talk about that later. Let's move to your next stop, which was an interesting place in Xiamen, and you met with entrepreneurs.
Yes, so it was a fantastic couple of days in Xiamen, which, for your listeners who aren't familiar with, is a city of about 5 million population, so bigger than LA, right on the coast of Fujian province, immediately across from Taiwan. In fact, the first night I was there, I had dinner with some folks at a beachside restaurant, and you could just see one of the Taiwan Islands, Jinmen, across the bay. It's that close. And certainly no military type activities noticeable on the beach where I was, right across from Taiwan. In fact, the only people we saw on the beach as the sun was setting were people posing for wedding photographs. So definitely not an aura of or an atmosphere of threat or anxiety. I spent a couple of days talking to entrepreneurs there, people running relatively small businesses. A few of them were exporters, including to the United States. A few are publicly traded small companies. And it was great to hear their perspectives from people and to try and answer some of their questions about what's happening in the U.S. and why the U.S. is taking this position.
And what was their reaction? What did they say?
Well, I would summarize it by saying that I was surprised that nobody I spoke to in Xiamen or anywhere else in China the last 2 weeks, I just got back a couple days ago, no one I spoke to was angry at the United States, at Americans, or not even angry at Donald Trump. I would say the overall response was bewilderment. What is the U.S. trying to accomplish with this? Some business people were expressing understanding or sympathy for Trump's desire to return manufacturing to America. But for example, I visited a factory that makes paper products for packaging. And the owner of the factory, as he's showing me his factory floor and the workers running machinery, said, who in America would want this job? He said, nobody in Xiamen wants these jobs. In fact, he told me he has to recruit workers from the poorest counties in China. Then he has to pay them a wage which he feels is too high given his margins, which are in the low single digits, and he has to give them free room and board. And so he's like, really? You're putting tariffs on this kind of stuff so you can bring this back to the United States? In America, are there people who want these jobs?
Would you say people were anticipating this?
Yes, for sure. In fact, that paper packaging company that I was just talking about told me that they had, since the first Trump administration, basically eliminated all of their sales in the United States, focused much more on domestic sales, and also opening up new lines of business in places like Southeast Asia and the Middle East to compensate for the loss of business in the United States. But
So
I think it was mostly just bewilderment that why take this path if your objective is to restore manufacturing? And it was interesting. Everybody I spoke to when I went to visit factories over a few meals with groups of entrepreneurs, they'd all seen that video that's flying around the internet of the U.S. Commerce Secretary Lutnick talking about how he wants to bring back jobs so that millions of Americans can be screwing tiny little screws into iPhones. My Chinese interlocutors all brought that video up, and they're just laughing. Like, really? We don't want our kids to have jobs like that. Who in the U.S. is going to do that?
So how did they justify in their head what the U.S. is doing? I think we've all seen that. Actually, there are more than a few similar videos. It's all generated by AI, but it's kind of amusing to watch those.
Oh, I think they're just bewildered. People kept asking me, why are they approaching it this way?
And how did you respond?
I said I was also bewildered. And one of the things that became really clear in these conversations in Xiamen is that Chinese people, and these are just, ordinary women and men who run small businesses, and, they're all paying so much attention to what's going on in the United States.
But I think also the Chinese media has been very focused on talking about this trade war as well. I think they've also long been prepared, to come up with a narrative, whether you agree with it or not.
Well, I read or listen to the state media just as a way to get a sense of how the government is feeling and what kind of propaganda they want to put out. But when you're talking
That's important. That's very
but when
important.
you're talking to, say, Chinese entrepreneurs in Xiamen, they're well-read. They're smart. They don't just swallow without questioning what comes out as propaganda in the official media. So I don't think it has that big of an impact. And as I said, I didn't hear any anger. I didn't hear any anti-American sentiment. Talking to a few people who are producing goods that do export to the United States right now, one of the things that they all said was that their customers in the U.S. had immediately reached out and asked if the Chinese supplier could share 50% of the new tariffs that the Trump administration is applying. And they all said they immediately wrote back and said, no, we can't. They are all running, they said, single-digit margins, so they don't have the opportunity to do that. And they were also questioning how American consumers were going to respond to this. For example, I talked to a producer of nutritional supplements who said the raw ingredients that go into what she produces are not made anywhere else in the world. And so she's arguing that Americans are either going to have to pay a lot more for these supplements or decide that they just don't need them for their diet anymore. And another factory I went to makes LED components that go into light bulbs. And they were saying that almost all light bulbs sold in the United States these days either come directly from China or are made in Mexico with Chinese-made components. And so the guy said Americans are either going to have to pay a lot more for light bulbs or sit in the dark. And I think these anecdotes illustrate one of the big problems with what I think the Trump administration has done here, which they haven't really thought through the secondary or tertiary consequences of these tariffs, which is, okay, if you want to bring light bulb manufacturing back to the United States, a dubious proposition in my view, but if you do, how many years is that going to take? And in the meantime, where are Americans going to get light bulbs, or how much are they going to have to pay?
In the meantime,
these tariffs are being paid for by American companies and consumers.
Yeah, I mean, these are all practical and very important questions that unfortunately probably Americans will have to experience very soon. What about your stops in Shanghai and Beijing? What did you hear?
So I spent a couple of days in Shanghai. They're mostly meeting with foreigners who are consultants or run businesses in China. And they're also, I guess, a sense of bewilderment about what the just a high degree of uncertainty. I spoke to an American friend who has a business in China producing accessories for barbecues. And so his biggest clients are people like Walmart and Target. He sells to Weber. And he told me that a number of years ago, at their encouragement, he decided to diversify out of China a bit. So he still has a factory in China, but he's recently set up factories in places like Cambodia and India. But now those countries have been tariffed as well by the Trump administration.
Yeah.
And so, how are we going to see this play out in the stores that the average American goes to? Who's going to have to either pay more or not buy more things. And that has a big effect across American supply chains. Because remember, if you don't buy an iPhone, even though it's assembled in China, you have an impact on all the people at Apple who design the phone, all of the people who sell and service, and the people who produce apps for it or the cases for your phone. So there's a lot of hit to American companies and workers beyond what most people just originally think of as, well, this will only hurt China.
It's interesting you mentioned this barbecue accessories manufacturer moving or diversifying to Cambodia over the years. I don't know if you read Peter Navarro's op-ed I think it was in Financial Times. It was a very stern warning to countries, specifically Cambodia and Vietnam, and his ultimate target was China. Basically, he was saying a lot of manufacturers have been moving to other Southeast Asian countries, thinking they could avoid the tariffs. They've all been tariffed heavily as well. But from his op-ed, it felt like, this is some kind of collateral damage. I don't know if you got the sense that the U.S. tariff policy, especially targeting Asian countries, in a way was to penalize those who, had learned early on to diversify their supply chain.
Yeah, I did read that op-ed by Peter Navarro. I think he's misunderstanding what's been happening. This is not somebody who is illegally transshipping a case of goods made in China, having it stop for 10 minutes in Cambodia and then move on to the United States. These are people who are building factories which create jobs and help people learn skills to get a better life in poor places like Cambodia. So if you want to create a coalition to stand up to China, this would be the last thing you'd want to stop. And these are genuine Cambodian products. So I don't understand what his thesis is there.
Yeah.
And also, to a large extent, these people have been responding to what the Trump administration did the first time around, which is to say that they wanted to import less from China. And now, but I think Navarro's main point is he doesn't want Americans to import anything. Before we get off of that, can I make a plug for an NGO, a charity group that I'm involved in? I'm on the board of directors of an organization called Coral Tree Education Foundation. Coral Tree builds schools in rural Cambodia and hires teachers with a focus on educating girls and young women in rural Cambodia, the kinds of places where these factories are being set up. And it's a U.S.-based organization that's a 501c3.
Thanks for doing the good work in Cambodia. I mean, we're probably going to see less and less U.S. funding into those places. I think,
for sure.
Yeah, so I think private sector funding, philanthropic dollars, everything matters. Now, Beijing, I assume you had some meetings with perhaps current or former policymakers.
The clear message I heard was that China wants to resolve this problem. The Chinese government wants to negotiate with the Trump administration and find a way to improve things. But I also heard a lot of frustration that they have not been able to engage at a senior level, and that dialogue between the two governments is now pretty much limited to very working level, routine conversations. And
can you say more about that? Because there's a lot of press coverage around this topic. Trump wanted the direct conversation linked to Xi, but how China wanted a more structured going through the bureaucracy, having more protocols, but it seems like the U.S. is not responding to that.
Well, what I heard, and I think a lot of this has been in the media, is that a range of senior Chinese officials have tried to get access to senior Trump administration officials. The foreign minister, Wang Yi, Xiamen, the current U.S. ambassador, Cui Tiankai, the previous U.S. ambassador from China, have all reached out to their contacts to try and get a dialogue going, and according to the Chinese side, they've all been rebuffed.
For what reason? What did the U.S. side say?
I don't know exactly what they were told, but I can imagine that one of the problems is when I've spoken to officials in Washington, that nobody knows inside the U.S. government what Trump wants, so they're all wary of engaging with the Chinese because what can they say?
Yeah.
They don't want to say something that turns out to be inaccurate from the White House's perspective, and that might get them in trouble or mislead the Chinese government. And I think this is not just about China. I imagine this is frustration shared by people in Ottawa and Mexico City and Brussels and London as well. And because if you look at what President Trump has said publicly about the tariffs and his objectives, they change frequently. At one point he was, with respect to China and Canada and Mexico, emphasizing fentanyl, right? That was the lead. When I spoke to someone in the administration a couple of months ago, they said that fentanyl was still the most important issue for Trump with respect to the trade negotiations with China. But then President Trump spoke for an hour in the Rose Garden on April 2nd, and he didn't mention fentanyl once there. So you could understand why the Chinese are puzzled. We saw just recently the EU trade minister go to Washington and leave and say, I still don't know what the Trump administration wants me to do. The Japanese government's representative came and had a 50-minute meeting with the president, and they left and seemed to indicate that they too were not sure what Washington wants. So not only are the Chinese puzzled about who their interlocutor is going to be, they're not sure what the president is really looking for.
Yeah.
Now, while I was in Beijing, they announced a new lead negotiator. My understanding from talking to people in Washington that this is a guy who's well respected, has been in the trade business for many years. But I think they're still waiting to find out who they can speak to. Now, President Trump, regularly says in public that he wants to speak directly to Xi Jinping, but we know that's not going to happen. That the Chinese leadership isn't going to engage with President Trump until some staff work has been done, that they understand issues and maybe make some progress on them. And honestly, that's the way the U.S. government used to operate as well. The president wouldn't dive right in with his counterpart until staff work had been done. And this takes time, but obviously President Trump doesn't want to operate on that basis. But I think it's quite clear that if President Trump is going to wait to start negotiations by doing it one-on-one with Xi Jinping, then probably nothing's going to happen, because I can't see the Chinese being willing to do that.
I do want to talk about what are the other things you heard from Beijing that wasn't covered in the media.
I think the main thing I heard was a sense of confidence that measures that the Trump administration is taking right now are, in the end, going to have a bigger impact on American companies and American consumers than they are on China. And that's a view that I share. I think this just hasn't been thought through in a careful way by the Trump administration.
Yeah.
Short term, what we were talking about before with light bulbs and nutritional supplements. In the short term, Americans are either going to have to pay a lot more for things. When people go to buy shoes for their kids, the price could be double what it was a couple of months ago. There aren't alternatives in the short term. And long term, what company is going to make significant capital investment decisions to put, say, a factory in the United States when tariffs are short term, because nobody knows how long they'll be in place? If they come away in a few months because the president makes a decision, or a few years, or after President Trump leaves office, you can't make investment decisions based on that. So the uncertainty, and Powell highlighted this in a speech he gave last week in Chicago, the uncertainty is having huge impacts on corporate decision making.
You mentioned the word confidence. I would like to hear you elaborate on that. First, China is much better prepared for this, right, given the first Trump administration's experience. And second, from just reading their state media propaganda, the message is so loud and clear that they will not bow down. They really want to fight to the end. That comes with the confidence that you mentioned. What gives China better confidence this time?
Well, I think the main thing is that Chinese companies have done an amazing job over the recent years of diversifying away from the United States market to find other markets. And so as a result, the U.S. is just not that big of a market for Chinese exports.
Do you have some numbers you can share?
Sure. So last year, the U.S. only took 15% of China's exports. That was equal to 2.8% of China's GDP last year. So it's not nothing, but it's not as big as I think most Americans might think. And more broadly, Chinese companies have been diversifying away from the developed world and more towards the developing world. So, for example, if you go back to 2000, when just before China joined the WTO, almost half of Chinese exports went to the G7, which of course includes the United States. Now, it's only about a quarter of Chinese exports go to the G7. And so ASEAN is the biggest, that's the Southeast Asian countries, the biggest recipient. But the other thing that most of your listeners might not be aware of is that exports overall have typically played a much smaller role in the Chinese economy than they did 20 years ago. So if we go back and look, for example, at the 5 years before COVID through 2019, during that 5-year period, net exports, that's what economists use to look at the value of the contribution of exports to the economy. That's exports minus imports. Net exports, on average during those 5 years before COVID, contributed 1% of China's GDP growth each year. So this is a country whose economy is much more like the United States now, driven primarily by domestic demand. Now, that model has shifted a lot. And so last year, the contribution from exports was dramatically higher. It was about 30% of GDP growth in China. But that wasn't because exports became that much more important. It was because domestic demand was that much weaker because of all the problems that we've seen with consumption in the Chinese economy over the last few years, starting during COVID and continuing. So what I have been talking about with the Chinese officials and economists that I've met is my view is that Donald Trump is providing two amazing, unique opportunities to China right now. And the question is, can China take advantage of those opportunities? The first opportunity is about the domestic economy in China. And getting back to the growth model that I described before COVID, where very little growth came from trade, mostly from domestic demand. Now, the Chinese government over the last few years has been increasingly talking about and taking some modest steps to improve and strengthen the private sector, the entrepreneurs that drive all the growth, create all the new jobs and wealth and innovation in China, and also to promote consumption. But it hasn't been enough. They haven't really gone all in on that. And by Donald Trump using tariffs to put pressure on China's exports, this is a great opportunity for the Chinese government to double or triple down and accelerate and deepen these reforms, which will pay off over the next few decades of creating a sounder business model for China. So can they take advantage of this? Mm-hmm. And then the second opportunity is Donald Trump is alienating much of the world because he's put tariffs on pretty much everybody, including penguins. And so this is an opportunity for China to go to the rest of the world. And by the way, most countries in the world already do more trade with China than they do with the United States. So this is an opportunity to go to the rest of the world and say, we want to do more trade with you. We'll be a more reliable trade partner. And we're serious this time about reducing the obstacles that your companies face. And also an opportunity to improve the political relationship around the world. And if the U.S. wants to join that later, fine. So these are two great opportunities. And that one, you can illustrate with the trip that Xi Jinping was making last week while I was in Beijing. He was off in Malaysia and Vietnam and Cambodia making that pitch. But it needs to not be the old pitch of, yeah, we want to be your friend, but we're not actually going to do anything about it. They need to deliver on that. Yeah. I have to say I'm less confident on that one and more confident on the domestic economic side for two reasons. One is that the Chinese leadership has been talking for several years now about treating the private sector better. And that's 90% of urban employment in China. It's 60% of the economy. It's all of the innovation, like the batteries and the EVs and the AI companies are almost all private. So they've already been talking about that and trying to do something. This is an opportunity for them to really do more. And then the second reason I'm optimistic is bold structural changes like this are the reasons that China has gotten so rich over the years. So when I first went to China back when I was a student in 1980, that we talked about before, per capita GDP in China was less than Afghanistan, Haiti, and Bangladesh at the time. It was a poor place. But we had these series of really big, bold changes, starting in 1978 with Deng Xiaoping emphasizing economics over politics, and then in 92, his Southern tour to really launch private firms. And then in the late 90s, when I was working in the embassy in Beijing, the Chinese government laid off 46 million state sector workers. Just think about that number. Privatized housing, joined the WTO to open the economy. And then in 2001, another big shift of inviting entrepreneurs to become party members and really spelling out that this was a ruling party now rather than a revolutionary organization. So can they do another big, bold move like that today?
Andy, during the pandemic and even as recent as maybe a year or two ago, when we talked, you were less optimistic about China's economic future. But now it sounds like after this trip, after Trump's tariffs policy, you think it actually offers China this maybe once in a lifetime kind of opportunity.
I do. And over the decades, my observations have led me to come up with kind of two foundational pillars for thinking about China. One is that Chinese people are incredibly resilient. They bounce back from a lot of obstacles, both foreign and domestic. And the second is that since the mid 90s, the Chinese government, when it comes to economic policy, has generally been pragmatic. What's been difficult lately is I don't think the pragmatism went away, but the level of stubbornness was just huge and disabling. So a lot of this depends on how you view some of the things that Xi Jinping's been doing in recent years. If you believe, as some people argue, that he is ideologically opposed to the private sector and entrepreneurs, then you have reason to believe that pragmatism in China is over. I don't look at it that way. Xi Jinping himself grew up in places like as an official in Xiamen, where I was before, and in Zhejiang, where the private sector really is huge and drives everything. So he understands this, I think. So I think the mistakes he made with policy in the real estate side or on the internet platforms and things like that were not driven by a desire to kill the private sector, which creates all the jobs and wealth and innovation in China. I think it was just badly executed, badly thought out ways.
Yeah, I agree with you on that. And that is in and of itself a problem within the party because of the way it is structured and the decision making is made. But the intention or the desire, I'm more on your side. I don't think he's trying to kill the private sector. Yeah.
Yeah, so I became less pessimistic last fall for two reasons. One is we could see in September that there was a Politburo meeting and there was a change in rhetoric that was significant about the private sector and also about the property sector, which was one of the big casualties from poor policy making. And then I went to Beijing in October, and a lot of the government officials and advisors who I talked to who were really gloomy on my previous trip a few months earlier were now much less pessimistic as well, because they too could see a shift, that they felt the leadership had realized now that they had a big hole to dig out of. And I think we've seen very, very gradual moves in the right direction. So like in many countries, including the US, the policy pendulum swings in one direction or another, and it often goes too far and then has to come back. And I think in China, it's starting to slowly move back in a better direction, but too slowly. They just need to move a lot more quickly and do it on a deeper level.
But what is the next? I mean, they can do a lot domestically, but with this tariffs and the trade war, it's not something they can fully control. So what do you think is going to happen for the next phase?
I have no idea. I mean, can anybody predict what the Trump administration is going to do next? The president has said repeatedly that he wants to negotiate a deal with China, and he thinks he's going to do that.
And some kind of dialogue will have to happen, right?
It will. I think that there are a couple of risks here that are important. One is that, while I believe the president doesn't harbor animosity towards China, I think he believes that he has some kind of rapport with Xi Jinping and that he wants to do a deal. I worry that if the talks don't get off or if they don't go well and the president gets angry at China, then he might take more disruptive steps, which would be bad for both countries. So I'm hoping that dialogue can get going pretty soon and that they can find a way to de-escalate this before it gets worse.
If this continues, how much further will Trump likely to go? There's a lot of worry about expanding to include services sector, or will we even see digital trade being included in the tariffs?
It's very unpredictable. The administration seems to really be focused on goods trade, so I'm not sure. And the U.S., of course, has a services trade surplus with China. So I don't know.
You kind of alluded to it. You think in the long run, force China, accelerate China's domestic economic transition. So what are the big things you think will happen? Some people are saying it could even help China move up the value chain, right? Some of the factories that you see in China today may not even exist because they could move up the value chain. It could change relationship with other parts of the world, Southeast Asia, Europe, anything else that could come out of this?
Yeah, I think the main question for me is, will the Chinese leadership take advantage of this opportunity to really accelerate and deepen the reforms that they've recently begun to move China's economy into the next phase, away from being manufacturing and trade focused, more towards being domestic consumption focused like a developed country. And for investors, this is really important because it will create a much stronger economy with great domestic focused companies. The other thing to watch for is what the impact on the United States economy is going to be, because this could lead President Trump to reevaluate what he's doing with tariffs. And so there's a couple of things that I think are kind of interesting. The Richmond Federal Reserve Bank published just a couple of days ago an interesting study. They found that there were 14 counties across the United States that were most severely affected by the tariffs. And when I looked at the election data, all 14 of those counties voted for Trump. So at some point, voters who supported President Trump in these counties might lose their enthusiasm for the president as the tariffs really bite there. The other interesting thing to look at is the University of Michigan Consumer Survey that gets published every month in the United States, has a breakout by political affiliation, which, to be honest, I'd never noticed before. But what it shows is that in April, Republicans who participated in this survey saw their concern about inflation, their inflation expectations go up sharply in the short term. But when asked about long-run inflation expectations, those Republican voters said they're not worried at all. They clearly still have a lot of faith and confidence in President Trump's ability to manage this. So if at some point inflation gets high enough that these Republican voters start to believe that the president is no longer handling this well, that they lose confidence in that and their inflation expectations go up, then you could see more pressure on the White House to change this policy as well.
I recently listened to a podcast by the New York Times similarly, especially for Michigan auto workers. They still seem to be supporting Trump's policy. It'll probably take a couple more months for people to really feel the pain.
Could take months, could take quarters. Hard to know.
Thank you. It's been fascinating to hear from you, giving your firsthand account in China. So let's hope, these two, I call them the clash of titans, don't bring more damage to the world. But until it stops, perhaps we'll have to endure some more pain, hopefully in the short run.
Hopefully in the short run.
As of April 24th, there's no public indication of U.S.-China negotiations, although a shift in U.S. tone is evident. Compared to the first Trump administration's trade war, China's current resolve suggests increased preparedness and confidence, despite internal economic challenges. Chinese companies have diversified their markets, mitigating reliance on the U.S. China is also implementing measures to bolster its economy, including relaxed fiscal and monetary policies, real estate stimulus, and consumption incentives. Xi Jinping's trip to Southeast Asia signals potential new trade partnerships. While the U.S. appears to be signaling a willingness to compromise, the question remains, what will it take for Beijing to engage in negotiations without appearing to yield to pressure? Stay tuned for more analysis and development. This is Perspectives with Wenchi Yu, where we analyze the policies and political strategies of Trump 2.0 and their implications for Asia, China, Taiwan, and beyond. Thank you for watching and listening. We value your feedback. Please subscribe to our YouTube channel and podcast. See you next week.